All right, it's another week, another WTF, or what the F happened. Welcome, everybody, coming in live from YouTube, Facebook. We got Instagram going on here and a whole bunch more. But today we got a lot of topics to cover. I've been gone for a little bit. I was across, or actually, as they would say, down under in New Zealand for about 10 days. And, I kind of got disconnected, but I saw certain things happening. And when I came back, it's like, bam, slaps you right in the face. We had some rough days in the market, so we're going to talk about that. We're going to talk about the Fed. We're going to talk about how the Fed in 2023 lost a significant amount of money, and I'm talking about a big loss. We're also going to talk about cargo ships and bridges collapsing and how tragic that was and how and what happened there. We're going to talk about lots of things today on your favorite show, What the F Happened, where we rant, we rave, and we will argue. We will be back after this. All right, we are back at it. Another week, another WTF. What's going on, everybody? Hope everybody's doing well. Let's dive right in. I got a lot of stuff to cover here today. I mean, the markets are looking like they're going to snap a 3-day losing streak. Now, the markets have been on a tear downward, and today it looks like we're going to snap that. I don't know if we'll hold. We're up about 174 in futures. Whether or not that's going to hold, we're going to find out. But were you there with Ryan Lee? J Rock says, yes, I was. Ryan's an awesome guy. We spent a bunch of time together. But anyway, let's first talk about the cargo ship. Let's talk about the cargo ship that hit this bridge in Baltimore. I saw this while I was on the plane the other day, and I just couldn't believe it. I mean, I don't have all the details, so I'm not coming from a place of expertise, but what it appears to have happened, or at least from what I can gather, is the ship lost power and then regained power and then lost power again and couldn't correct. Now, if any of you have more information as to the actual reason the cargo ship hit this bridge, please let me know in the chats, in the comments. But from my take, that's what happened. But what creates a ship like that to lose power? Why didn't it have an emergency generator backup? Which I'm sure it did, but maybe it just didn't happen fast enough. I watched the video over and over and over again. You see the ship in the background, then you see it go black, and you see no smoke. Then all of a sudden the lights come back on, and all of a sudden you see that the engines are just full steam ahead because you see all the smoke coming out of the stacks. Then they lose power again, and then they regain it, but it was seconds before it hit the bridge. And when it hit the bridge, the whole bridge tumbled down. Now, I know there's a couple really tragic things. Number one, lives were lost. People are still missing. At first, I thought it was 35 people, and then last night I saw 6. I don't really have the confirmed number yet. Does anyone know? I mean, how many people, died because of this, or how many people are missing, should we say? I mean, at this point, we can assume that, falling in the water, they can't find you. It's probably not a good thing. But the other thing, too, is the disruption to the shipping lane, because that's a major shipping lane, the disruption to that port, and lots of other questions coming out about that. So, yeah, why didn't they drop the anchor? I mean, if you watch the video, if everything was going fine and they lost power, they would have panicked. Could they have dropped the anchor? Yes. Would it have actually made a difference in that amount of time? I don't know. I mean, there's so many things that probably were going through that captain's mind. I mean, when you lose power in a ship like that, I assume you lose everything, rudders and everything else. I don't know this to be fact. I don't, captain any large ships, but, 6 was on the news. People are saying, let's see, drop anchor. But yeah, just keep these comments coming on this Baltimore situation, because it is definitely something worth talking about. But let's just move on. I got a couple other things. We're going to talk about oil. But here's something that I've been talking about and we've been covering a lot on this show, and it's banks. We all know last year was a pretty rough year for a couple banks, Silicon Valley Bank, and there was several others. I'm not going to get into the names of them all, but and then all of a sudden the Fed came out with a program, saved the banks from tragic collapse, because there was going to be a lot more runs on banks, and we haven't really heard anything. but actually we have. I've heard a lot about banks, and right here in Yahoo Finance, Reuters posted S&P Global downgrades outlooks on 5 regional U.S. banks to negative. So what this is basically saying is the S&P is downgrading banks, and there's 5 specific banks, and I'll try to get into some of this information for you here. But these 5 banks got downgraded to negative. Now, you know how bad that is when they downgrade a bank to a negative outlook? Not good, folks. Not good. Banks are on life support right now. And not only that, like, and I can't find the article just because I don't have Steven here with me today. Steven's actually at the Family Mastermind. Shout out to Steven and Shauna. You know, while I was in New Zealand or flying home from New Zealand, they were holding it down out there in Tampa, Florida at our one of the masterminds we belong to, which is Family Mastermind. So, you know, representing Private Money Club and BYOB out there in Tampa. So he's not able to join me today, but we got New York Community Bank Corp flagged a surprise quarterly loss, citing provisions on sourced CRE loans, which triggered a sell-off of U.S. regional banking shares. So there's several factors going into play here when you're looking at the banks. And I've made lots of YouTube videos on this, but let's just cover some of the high level. Number one, last year, what happened to Silicon Valley Bank and all the other banks that had troubles? Well, it was simple. I talk about treasury bonds all the time, but when you think about a bank's liquidity is usually its tier 1 capital. Its tier 1 capital represents about 10% of all deposits. Okay. So if that's how much money they have in reserves, where is that money held? Well, banks obviously are in the business of making a spread. They love making a spread. So what banks will do is they will take their tier 1 capital, they will comply with federal regulations as to where that money can go. And there's only 2 places. Dave Ramsey, if you're watching, yes, you're wrong. 2 places banks store their tier 1 capital. Number 1, treasury bonds. Okay, United States treasury bonds. And they do different durations, but very commonly 2-year and 10-year duration treasury bonds. Okay, and the second place banks hold their liquidity and their tier 1 capital is BOLI, bank-owned life insurance. Yes, Dave Ramsey. That is where they hold it. You can just go right to FDIC.gov and you can type in BOLI and you will see how much money banks, almost all the banks, hold in life insurance, buddy. Because, and folks, if you haven't caught that video, I just did a video on YouTube just destroying Dave Ramsey because he pissed me off. He pisses me off a lot, but this one really just put the nail in the coffin for my take on Dave Ramsey. Because I used to say good things about Dave Ramsey, but it's hard for me to say it because the dude just talks straight out of his ass. And I'll agree. Sometimes I talk out of my ass too, but he just blatantly says things that are not true by any account. And one of the things he said in that video, just so you all know, was a guy named Jim calling in, talking about the infinite banking policies and talking about how proud he was of a policy he took out on his son, his young little boy. He took out a whole life policy on his son. And he was talking about how the policy grows, what he's going to do with it. And Dave Ramsey just bashed this guy, literally just made this guy feel like he's this big. And it was terrible to listen to. But Dave Ramsey blatantly said, banks do not buy life insurance, which is the farthest thing from the truth. Anyway, banks hold money, tier 1 capital, in 2 places. BOLI, which is basically a whole life policy, but done under BOLI, okay, bank owned. So there's different tax advantages to banks that we as individuals cannot get. And number 2, treasury bonds. So what happened is the Fed, if you all remember, was combating inflation by jumping rates up very, very quickly. And we'll talk about the Fed in a second. And when they raised rates really quickly, all these bonds, these treasury bonds that the banks were holding as tier 1 capital, the liquidity dropped in price. That's what happens. It's like an X, right? So if you're thinking about treasury bonds, if interest rates go up, the price goes down. Interest rates up, price goes down. And on the other side, if interest rates go down, the price of the bonds goes up. Hence, all of you should know that that makes a really good investment opportunity right now because Fed raised rates, and we know now true that the Fed's going to drop rates. So wouldn't that be a good time to load up on treasuries? Yes, but that's not what banks did. Banks loaded up on treasuries when rates were low. And when rates were low, what is the price of bonds? High. So just when everything started falling apart for Silicon Valley Bank and they had a rush on the bank, a run on the bank, as they would call it, everybody wants their money. Well, the bank's got to come up with money from somewhere. So they go into the reserves. And where are the reserves held? Treasury bonds. And what happened to their treasury bonds? They suffered a massive price decline or drop because Fed raised rates so quick. So they were selling their treasury bonds at major losses. Game over. End of story. So that's what happened to banks. But, what we didn't see then that we can see a little bit now, and what the S&P 500, or not S&P 500, but the S&P rating agency, I almost said the S&P 500 because that's just what you want to say when you talk about the S&P. What they're talking about now are the bad loans on the books. Okay, they're talking about the CRE loans, and they're talking about some other loans, and they're just kind of going into a whole bunch of reasons why they're downgrading these regional banks, but really the exposure to CRE loans. So let's just quickly just do a real quick look on CRE loans, because I could use a brush up on this too. So it's pretty simple. We just go to this thing called Google, and you go to Investopedia if you want to know what CRE loans are, but they're commercial real estate loans. So why would there be a problem with commercial real estate loans? Well, if banks hold a lot of commercial real estate loans, which they certainly do, we've got a couple things happening. Number one, in the commercial real estate space, things aren't looking so good, are they, since COVID? I mean, a lot of businesses have big office spaces, commercial real estate, and then now, well, employees aren't coming back to work. They're working from home. They're working remotely. So these businesses don't need all this real estate, but they were locked into leases. However, leases all have a term of time. And when that term of time ends, do you think these businesses across the country, you think they're going to renew their leases with these commercial real estate companies? Probably not. Or they're going to reduce the amount of real estate space they use. So these commercial real estate loans are suffering. Now, we haven't really seen the worst part of it yet, because a lot of these leases are still in force. But once these leases come out, like once they run out, these companies don't renew. That is going to be a big hit to commercial real estate, which basically poses a massive risk if the banks are holding a lot of CRE loans. If they're holding a lot of commercial real estate loans, well, then all of a sudden, now these companies, okay, that own these commercial spaces, they might just say, we're done. And they're going to default on their loans. That's phase number one. Phase number two is, I think, the bigger part of the problem. It's been talked about a lot. I did a YouTube video on this, and I've talked about it here a lot. And I want your comments on this. So once I'm done with this, we're going to pause, and I'm going to look at all your comments, okay? From Instagram, get your comments coming in, YouTube, Facebook. Let's hear it. So this is the bigger part of the problem. All commercial loans, for the most part, all commercial loans are term loans, okay? They have a rate lock period. Now, any of you real estate investors, like Mark Perry can probably contest to this, Lynn. I mean, we all know this. I have commercial mortgages on my existing real estate that I have. And all of my commercial real estate mortgages have now reset. So what does that mean? Well, that means that my rate lock period has expired, and then I need to refinance the loan. Usually the refinance on these commercial loans is done with the same bank. It's when the rate lock period ends. So, for example, I'll give you mine. Most of my mortgages that I took out when I was buying back in 2014, 15, 16, 17, 18, they were all 5 to 7 year loans. They were 25-year amortizations, but they were 5 to 7 year rate locks. So if you just do the math and you fast forward to right now, 2024, you can see all those mortgages have expired. The rate lock has expired. Now, what do you think my rate was back in 2015, 16, 17? 5 to 5.5%. That was my commercial rate. And that was probably a lot of these businesses' commercial rates. A lot of these real estate companies or real estate portfolio holders, their rate lock was probably the same, maybe even 4%, 5%, 6%. So now when they mature in today's interest rate environment, where do you think they're maturing to? If any of you said 7 and 8%, you're absolutely right. It's almost a doubling effect. So as these rates expire for these commercial loans, now all of a sudden the price of these loans is going to double. The interest rate on these loans is going to double, which means the payment on these loans is going to go way up. And in some cases, it's going to double. So now let's take phase one and phase two of what we just talked about with commercial real estate loans. Number one, there's a lot. less need for commercial real estate in the whole economy, in the entire realm of business. We just don't need as much commercial real estate. So if the commercial real estate isn't changing into more of a usable space, well, there's vacancies and lots of them. So that's phase number one. Less income coming in, less rents coming in. But number two, costs are going up. Utility costs are going up. Property taxes are going up because as these buildings are getting reassessed, most real estate has gone up in value. So as they reassess this over the last couple of years, these properties, these commercial real estate portfolios cost more in terms of taxes. Even though the property's worth less today, it doesn't matter because they got reassessed. Not only that, costs go up on the mortgage, okay, on the debt service, and income's down. I mean, can you all see what I'm seeing? Disaster. Well, that's what S&P is seeing. And that's why S&P has a negative outlook on 9 U.S. banks, or 18% of those it rates. Yeah, so 18% of all the banks that S&P rates, they've downgraded to a negative outlook. And I'm just kind of just looking at this whole thing, but like, think about that. That's bad news. So let's go over to some of the comments here. Let's see what we got. We got from YouTube, we got Mark saying, oh, glad you're back. Yep. Chance to check your private insurance contracts are safe from the great taking. Yeah, I think we're good for right now. Let's see. So we still got talks about the the Baltimore one, but let's see over here on Instagram. Anyone got anything to say about banks? Nope. Here's what I have to say about banks. Be careful. If you've got more than 250,000 in any one bank, it's time to diversify banks. It's time to go out there and build relationships with a few more banks. It's time to get your money spread out. Hell, it's time for you all to be the bank right now. It's time for you to get off the traditional bank train and get on to the private banking train, which is you being your own bank. But if that's too drastic for you right now, fine. Play the cup game. And I don't have any cups here. We're actually moved out of these offices now. So the only thing in this 8,000 square foot office facility right now is the studios. Everything else is now at the new building, which you'll be seeing more and more of as time goes on. But just don't be silly, okay? We already know what S&P is doing. They're downgrading banks. We know banks are in trouble, especially regional banks. And if banks are in trouble, what does that mean? Well, that means be careful with banks. Now, I know Silicon Valley Bank owners and bank holders were all made whole. Do you think that's always going to happen? It's not. And do you think the Fed's going to continue to support all the banks so that they don't fail? No, eventually, just like 2008 and 9, they're going to have to let some of these banks fail, just like they did with Silicon Valley, but they bailed Silicon Valley Bank, the account holders out, even above the 250,000 FDIC limits. So if you got more than 250,000 in any one bank, get it out of that bank and go to another bank and another bank and another bank. And while you're at it, diversify the types of banks: community banks, commercial banks, regional banks, and credit unions. Spread it out. They're all in your own town. Spread your money out. That's my suggestion there. But let's continue on here. Let's see what else is going on in the news. I saw a couple other things earlier today that I thought were interesting. You hear me talk a lot about engines and V8 engines and EV versus gas powered cars, and the whole initiative from the dude and the dud, or whatever you want to call them today. But right here, Ford sees opportunity for Mustang as competitors abandon V8 engines. Now, have any of you seen the EV Mustang? That's a pretty badass car, right? Freaking joking. Like, have any of you seen the Ford Mustang EV? Is that a supercar? Is that a muscle car? Do you look at that thing and be like, man, listen to that V8 growl? Because that's what we know of Mustangs, right? From all the way back into the 60s, straight through to today, when you think of a Mustang, a 5.0 Mustang, you think of a healthy growl, right? That V8 Mustang engine sound. But when you get in a Mustang EV, do you have that same feeling? Because I gotta believe there's a lot of people that buy Mustangs, or did buy Mustangs, because of the engine sound. Do any of you own a Mustang? I'm just asking. I mean, any of you remember Vanilla Ice, rolling in my 5.0, right? V8 5.0. So I just, on my way back from New Zealand, I had a long layover in Dallas. Well, it's kind of convenient because in Dallas, that's where our developers are and AOCA is the name of our developer for Private Money Club. So what I did is I left the airport and I went over to their offices and we spent the day kind of going through the new 3.0 version of Private Money Club. If any of you don't know what Private Money Club is, just go to privatemoneyclub.com and you can witness the first of its kind, the first dating site for money. People with money meet people that need money and both make money. Great, right? That's Private Money Club. As simple as that. So I was out there, and one of the unique things when I got to the office is, they park their cars. They got like an overhang and they park their cars right into this overhang. And there's a Jeep, a big jacked up Jeep, which is Chad's. And then there was this car, and I didn't know what the car was, but it was pretty sweet looking. It had really clean lines, almost resembled from the front what I would interpret as kind of a new Lotus. But then when I got around to this car, it was a red car, I noticed the Toyota sign on the front. Do any of you know what kind of a car this was? Well, that car was the new Prius. Now, listen, I've always been a fan of the Toyota Prius, the hybrid Toyota Prius. The battery that gets charged by a gas-powered motor. So when the battery runs low, the gas-powered motor kicks on, kind of like a generator, recharges the battery. When you hit the brakes, it charges the battery. Like this cool thing. They get 40 to 50 miles to the gallon. They've been used for well over a decade by taxi companies and Uber and everybody else. And they have pretty much kind of made their mark in the industry as one of the most reliable, fuel-efficient cars on the road. Bar none, right? Let's just be honest. It's probably one of the best examples of a hybrid that was just a pure success. Does anyone drive a Prius? Anyone drive a Prius? Oh, thanks, Three Little Birds. Yeah, I've never met a dollar I don't like. This is kind of one of the old BYOBs. So right then and there, I was like, that's a badass looking car. And I had to ask him, I said, so, what does a car like this cost? It had white leather seats, kind of like the Teslas. It had all-wheel drive. I'm like, I didn't even know they made Priuses in all-wheel drive. And he showed me all the features. I'm like, holy crap. Do you know that this car only cost $43,000? Now, I say that kind of loosely because cars now are way more, but $43,000. That's a pretty affordable car for an all-wheel drive hybrid that looked like that. So riddle me this, Mr. Dude. Why, if we have a model like the Toyota hybrid, okay, the Prius, that has worked and will continue to work and gets incredible fuel efficiency, doesn't not run when it's super cold because the battery doesn't start, doesn't have a lot of the problems that the EVs have, why didn't we just go deeper into that technology? Why didn't we just kind of take the model that Toyota had with the Prius and just go deeper into that if we were really pushing green initiative? Because that car is incredibly green. Yes, it does burn fuel, but I mean, the car has a 10-gallon tank and he gets almost 500 miles to that 10-gallon tank. Just do the math. Just do the math. Yeah, that's pretty darn efficient. Far better than what most of these EV cars are getting, with a lot less of the problems, without the dirty, mines that it takes to mine all the stuff that's required to build the battery. They still have a battery, but it's not reliant on just a battery. So yes, does it solve that mining problem? No, because they still have a battery in them, but it's still, anyway, you get the point. Why do we have to go straight into EVs? Well, I guess we don't now, because now the dude and the administration is kind of changing its tune on EVs because the car companies can't sell the damn EVs. They're literally sitting on the lot twice as long as gas-powered cars. So that strikes up a bit of a problem, because if car companies are forced to go all EV, they're not going to make it. And then the government's going to have to bail out GM, bail out Ford like they have in the past, and round we go. So conclusion, find a better way. Porsche's going into hydrogen. A bunch of other manufacturers are experimenting with hydrogen. That sounds like a pretty good solution. Hydrogen's been around for a long time. But not only that, hybrids. We don't need to go all EV. We can have gas-powered cars, hybrid cars, hydrogen cars, and yeah, sprinkle in some EVs too for those that really love those EVs. I mean, come on. It's all about diversification, right? They say diversify your portfolio. Well, diversify your car offerings, because we don't really have that under the dude's EV Green Initiative plan. Anyway, that's my rant on that today. Anyone have anything to say about that? So there we go. Facebook user said, I purchased 3 Priuses. Love my Ford hybrid, Lynn says. What else do we got? We got any other people that have Fords that the hybrids are great. You know, I used to have a hybrid. I liked it. Yeah. Anyway. All right. Let's keep going on here. So it's easier when I have Steven because he's already got all the stats pulled up and everything. But let's see. I browsed through this. I just got to find the article. I want to talk about the Fed here a little bit. But before the Fed, let's hit credit card debt. So I've talked about credit card debt. And here's another article in CNBC about credit card debt yet again, hitting record highs. So, you know, when you go out, like no matter where you're at, you can see that people are still out spending money. People are struggling, yes, but people are still out spending money. How can that be? Wages have barely kept pace with inflation, but yet people continue to spend. Well, this article talks exactly about that. It talks about how people are using credit cards at record levels because they are employed. Employment levels are still really good. The unemployment numbers are very low, which means most people have a job, they have a paycheck, and they can, you know, pay their minimum payment on their credit cards. But that doesn't say anything for how much credit card debt can we sustain. Well, it's quite a bit right now, and it keeps getting higher. You know who else keeps getting higher? The United States government deficit and the United States government debt. So the citizens of this country, you, me, and everybody else, we're racking up credit card debt, and then the government's racking up its own kind of debt. So we got a little bit of a debt bubble, and eventually, I guess it's just a matter of time before both bubbles burst. When is that going to be? Well, I have no idea. Well, this is an interesting one. If you've been following the whole political environment, the whole political race, I mean, you've heard about the dude's been out there on the campaign trail. He's been doing what the dude does, stuttering and talking about things that make absolutely no sense. I love the tax on the rich. That was a good one. But then you got Trump. Trump's out there doing the Trump thing that he also does. Love it or hate it, he is. But here, and I don't know how to say this, but QATRI Royal reportedly invested $50 million in pro-Trump news channel Newsmax. So how many of you listen to Newsmax? I know my mom does. I know a couple other people that listen to Newsmax. I don't listen to the news. I just pulled the news up for this show. But how many of you follow Newsmax? Is that a good station? So obviously this company that invested $50 million in this channel does. So I think when we're really looking at the different news channels, you know, like CNBC, CNN, you got Fox News, which I know a lot of folks like Fox News. And then you got this new one, Newsmax, or maybe not so new, but obviously this company is doing quite a good job of investing in them. So they see something there. Oh, the Fed sues for seizures of 2 New York apartments worth $14 million tied to ex-Mongolia leader. Interesting. That one's not so important to talk about. Just hitting some of the stuff here. Well, auto loans are defaulting. That's interesting. Auto loan debt. So they're talking about debt relief options. So lots of people defaulting on their auto loans. But this brings me to an interesting, since we were talking about V8s and all this other stuff, I do have another article that I want to go into here. And this is talking about petroleum. And this is not in the news. This is from a white paper. Okay, a white paper from an economy. Oh my God. I apologize, folks. I'm stumbling on my words. What you have to understand is I literally, over the last 2 days, traveled 23 hours getting back from New Zealand. So I'm just not with it this morning. I'm exhausted, and that is putting it lightly. So my mind isn't moving as fast as my lips. So just bear with me today. I'm just dealing with massive time differences because the time difference is about 17 hours. I went back in time. So kind of like, you know, Back to the Future. Well, I went back in time yesterday because I left and arrived on the same day, but I traveled 24 hours. Everybody understand that? So in New Zealand, I was always a day ahead of all of you folks here in the States. So if it was Tuesday here, it was Wednesday there. So when I flew back, I literally flew back in time. Kind of useless information. But anyway, back into this. So this whole article is talking a little bit about the Fed, and it's talking about how the Fed is probably not going to lower rates as quickly as they said, because the inflation numbers are still relatively high. But that's old news. All of you know that. So in doing that, what they were talking about is they were talking in this article about oil prices, because oil prices are going up. Why are oil prices going up? Supply and demand. Okay. And also our strategic petroleum reserves. So our SPRs, you probably remember when Biden sold off a bunch of our reserves. Well, they haven't refilled that reserve yet because they're waiting for the prices to go down, which I get it. Buy low, sell high, right? Got it. Okay. But we literally are at dangerous levels. So let me read a little bit about this article here. The U.S. is the largest oil producer on the planet, but we're not saving more for global disruptions, and we're not expanding our ability to be energy independent. Very different now under this administration that was under the last administration. The last administration, if you recall, was very pro being oil independent, energy independent. This administration, not so much. Now, listen, there's pros and cons to both. I get it, but being energy independent in today's world, pretty darn important. But for years, Congress under both parties has used the SPRs. So they're talking about Congress using the strategic reserves as almost a savings account. And it's saying both President Obama and Trump and the dude all sold oil from the SPR in the later years of the 10-year budget windows. But then it goes on and it talks about the dude, President Biden, supercharged it by selling almost 200 million barrels of oil to lower energy prices around the Russian. Remember when the whole Russia-Ukraine thing happened? So it rattled oil prices and prices went up. They sold 200 million barrels, which is not what the STRs are for, or SPRs are for. They're not to reduce oil prices. It's for like a disruption. It's for when something really tragic happens, not the rise of prices. That was more or less buying votes. But hey, nobody's keeping track. So did it work? Well, it did, because it brought oil prices down, but oil prices are creeping back up. So it was a very temporary solution. But we sold our strategic reserves. And how does that look? Well, let me read that, because there's a really good thing here. So the SPR held around 620 million barrels of oil in 2021. So 2021, we had 620 million barrels. Now, I don't know in context whether that's a lot or not a lot, but let me keep going. And those levels have fallen to 346 million barrels in 2023, the lowest level in 40 years. So now all of a sudden my mind articulates, holy crap, we're at the lowest level in 40 freaking years for our oil. So it holds 361 million barrels right now. And the Biden's plan, he has to replace that oil that he sold at $95 per barrel. That's what they sold it at, 95. Okay, so I would assume they bought it at less, which is buy low, sell high. Got it. Okay, but the administration plans to buy oil back between $67 and $75 a barrel. That's where their target price is. Now, here's the question. Here's what this particular economist is saying. Is oil going to go back that low? How long is it going to take for oil to go back to that? Or are they just going to kick this to the next administration and make this their problem and then blame them for not having enough strategic reserves when something bad happens? So that's what this whole article is about. And it's talking about how they're putting pressure on Congress, both parties are, to try to get this SPR back, but they can't, because oil prices are going up, up, and up. And they're going up, up, and up because there's a lot of demand, and because there's still disruptions out there. There's disruptions in global supply chains. There's disruptions because of the Ukraine-Russia war. There's the whole BRICS thing, right? There's lots of disruptions out there right now. So prices are going to remain high, and probably going to go higher as we get into the summer months where everybody likes to travel. So we all know that usually in the summer, gas prices go higher. Well, it's supply and demand. That's all it is. And it's talking just about this as it goes on. The U.S. has been the largest oil producer for the past few years, but is partly OPEC plus has quotas in place for members to hold back supply to keep prices high. So it's talking about how OPEC has been holding back supply, keeping the price of oil high, making it so that this administration isn't refilling the strategic reserves like they should, because they've got a target price and we're just not there. So anyway, long story short, it's a dangerous situation. We are not in a good position when it comes to our strategic reserves, to our oil or energy independence. And I'll let all of you kind of just take that for what it is. But it goes on, and I think this is a really interesting thing that it talks about. It says Mexico and several other nations are building refineries where we are not. So we can produce a lot of oil, okay, crude, but we can't refine it. That's the problem. That's why we ship so much of our oil overseas or to other places, other countries. We don't have refining capability. So we send our oil out and then we buy back the refined gasoline or whatever the refining process or material that we actually need. So Mexico is investing heavily in refineries. And it seems unlikely that their specifications will be close to ours. So we have specifications for our refineries, and it's basically saying that will Mexico meet those specifications? And also there's the Red Sea conflict, which we've talked about, and that's heating up. The Ukrainians are taking aim at Russia oil production. So Ukraine is hitting their storage and their production. China eventually will turn the economic corner. We're going to have substantial production of assets. We're ignoring low levels of SPR, turning a blind eye to our falling refining capacity. I've called for oil price hovering around $100 a barrel. So that's what this economist is saying. They're thinking it's going to be around $100 a barrel, not 80, not what were they saying they would buy at? 67 to 75. So again, that's a bit of a problem. And I just thought this was a really unique article, and I thought it was very telling of where we're at today and what's going on and some of the issues that we have in this country. But anyway, on to other news, and let's see. There was one other one here I wanted to hit. Now, you always got stuff about the pharmaceutical companies. Let's see. Kind of not a whole lot in here. But anyway, let me ask some questions of the audience here. And I'm going to come over to your questions here in a second. So thoughts on Kennedy and stuff like that. But what are all your thoughts right now? We're in March, almost going into April now, in an election year, in a year where we're teeter-tottering whether or not we could go into a recession or not, the soft landing versus crash landing versus no landing, because like I saw an article that I was reading on the plane, and it was talking about not soft landings or hard landings or crash landings. It was talking about no landing. And that kind of made sense. Kind of like when a plane's coming in and it just can't, maybe it's coming in a crosswind and it just takes back off and it just doesn't land. Well, maybe that's what's going to happen in 2024. Maybe there's just going to be no landing. The plane's just going to stay in the air, and then we're just going to basically let the next administration or whoever wins the election, we're just going to let them deal with it, right? That seems to be a little bit more about what is going to probably happen this year. It's probably unlikely that we'll see a recession this year, but we're more than likely going to see a recession. It's just a matter of when. And when we see the recession and when it does happen, it's probably going to be pretty bad. And everything that I can see, and listen, I could be totally wrong on this, but it certainly seems like Trump has a leg up over the dude in the polls. Seems like he's doing a little bit better. I mean, does anyone disagree? Love or hate Trump, doesn't matter. It seems like he's got a little bit of an upper hand right now. I mean, yes, let's take away cheating and voter fraud and all that good stuff, but it just seems like he's just got a little bit of a lead. So if Democrats really just kind of just bowed down and just said, all right, we're going to, let Trump take this one because Biden's not going to hold up, which I don't think is what they're doing, but let's just hypothetically say that. And then all of a sudden Trump takes over and then the economy takes a dump and we end up in a recession. Trump has to fix all these oil independence stuff, the energy independent stuff, the refineries. He's got to tackle the strategic reserves. So the administration that we currently have could leave a massive hole and a massive problem for the next administration, whether it be Kennedy or Trump, right? A pretty bad situation to walk into. So, when I'm thinking about this whole thing, I'm kind of just looking at what president would want to deal with these problems? I mean, well, Kennedy certainly has stood up and said that, he's got some decent policy and then some things that maybe some of you don't agree with. Same thing with Trump. He might have some good things and some bad things. I mean, I think everyone that loves Trump also has some things about Trump they don't like, myself included. So when you're really looking at these political candidates that are running for the presidency of the United States of America, you're not going to have anyone that's perfect because there is no perfection when it comes to politicians, period. You're going to find things you like and things you don't like, and you're going to just weigh it out and say, which one of these is the better fit for well, a lot of people vote for themselves, like what benefits me, but really we should really look at what benefits this country and which candidate is going to do best by the country. So we don't have to make this about politics at all, but when you really look at it, and I just want to hit some of these comments that are coming in, some of the stuff that that Kennedy stands for, he could be a good candidate. But is there a chance that an independent could actually win the presidency? I don't know. What does everybody think? Could an independent win the presidency? Or is the independent more than likely just going to take votes that would have went to one of the two candidates? And if they're going to take votes from one of the two, who's going to be the greater of the two? Is Kennedy going to take more votes away from Trump because there's such a polarizing hate for Trump? Is that just mean people that don't want to vote for Biden, but never would vote for Trump will vote for Kennedy, which would hurt Trump? Okay. Is it going to be people that normally would have voted for a Democrat that are like, I'm not doing that, but I'll vote for Kennedy? Okay. Because I like some of the things he stands for. Could be. I don't know. I'm not an expert in this, but my thoughts on Kennedy, I like him. I mean, I truly do. And I can't really think of anything that I don't like about Kennedy. But I, again, am not an expert when it comes to politics. Lisa said, saw a documentary on pawn shops. They said that they are predictors of the future. People are turning in jewelry and possessions to pay for day-to-day living. Wow, Lisa, thanks for commenting on that. And that is pretty an interesting point, because if people are taking and turning in their jewelry, their possessions, just to survive, what does that tell you about the economy? Does that tell you that what we see in the news may not be what we're actually living? Because that's what I'm seeing. What I see in the news when it talks about things being good, unemployment being low, the economy growing, and all this good stuff, to me, it's all bullshit. Because what I see out there when I'm talking to people, when I'm talking to family members, things are tough. Price of food is through the roof. People are struggling to maintain their day-to-day lives. And what Lisa just said about pawn shops being a predictor of the future has a lot of merit to it. Let's see. How safe is it to get into a HELOC loan these days? Well, July Bassett, I would say it's pretty safe, depending on what you're going to use the HELOC for. So don't think whether it's safe or not safe to get into a HELOC, because it doesn't matter what the interest rate is. Let me give you an example. Is an 8% home equity line of credit expensive when you have 24% credit card debt? No. You could get the HELOC at 8, pay the credit card debt off, take the amount you were paying the credit card and pay it back to the HELOC. Makes perfect sense, right? 24% credit card or 8% HELOC. Which one is better? Yeah, the HELOC for sure. So it's all relative to the problem that you're trying to solve. When you think about whether a HELOC is good or bad, don't think about good or bad. Just think about what problem would this HELOC solve. So for some of you, you would say, okay, I'm going to take the HELOC out, and I'm going to use that HELOC, which is literally tapping into the lazy cash sitting in your house, the money sitting in your rafters. You're pulling the equity and you're using that equity. And then at 8%, you could pay off high interest rate debts. Anything higher than 8, that makes perfect sense. Just always make sure whatever you're paying the credit cards, you pay back to your HELOC, dollar for dollar. So if your credit cards are costing you $1,000 a month and you pay all your credit cards off, $1,000 a month goes back to your HELOC. Make sense? Some others would say, I'm going to take a HELOC out, and I'm going to take the money from the HELOC, and I'm going to invest it on Private Money Club at 12%. So let's do the math there. If the HELOC cost you 8 and you're lending it out at 12, are you in the money? Yeah. And is it a pretty safe time to sit there and say 8% probably would be the highest we're going to see in HELOC rates, in the near future? Yeah, because the Fed has already said we're looking to lower rates, not raise rates or hold rates. So unlike last year, when we were kind of in this unknown land of how high the Fed was going to go with rate increases. So it was a dangerous thing when you were looking at a HELOC at 8, because it could go to 9, it could go to 10. And if I'm lending out at 10, I don't know. What if rates go to 11? Then I'm upside down. But now with a HELOC, it's a pretty safe bet that whatever your HELOC rate is today, there's a good chance in a year or 2 years from now, it might be lower. So when you're taking that and you're paying off debts, or you're lending that money out at a higher rate, well, really just look at the risk on the deal that you're lending on. And that's all you got to look at. That's the way I would factor it. Let's see here. It keeps the dollar propped up for the moment. Yes, that's a good point. I didn't touch on Bitcoin yet, but we will. The financial reset, worried about the safety of money in the bank, FDIC balance cat. Paul Taylor is talking about the FDIC. And can the FDIC actually support all the money that they say that they can? No, not even close, not even a fraction of close. So I remember I did a YouTube video, and this was probably a year or 2 years ago, where I literally looked at how much money the FDIC had, okay, and how much money it was covering at just the 250,000. And I don't remember the numbers, but it was literally fractions of cents. of every dollar that it's saying it's backing. So the FDIC definitely can't cover all those balances if there was a massive fallout of banks. But here's what the FDIC can do. The FDIC can lean on the Fed, and the Fed can just print unlimited dollars. We've already seen that happen. $5.2 trillion during the pandemic, over $10 trillion since 2008, financial collapse or almost collapse, the Great Recession. So can the FDIC actually pay off all the balances? No. But push come to shove, would the Fed step in and back up the FDIC? I'd have to believe yes. So I wouldn't so much worry about whether or not the FDIC can back up the 250,000 limit. I would say they can. And I also wouldn't think that all banks are going to go down at the same time. I think you'll see major fallout of regional banks. I feel like that's kind of part of the plan. I feel like they're trying to consolidate the banking industry. And you know, if you were the Fed, that would make sense. Get rid of all the regionals, make it just the commercial, so you have more control over the banking system, because that's essentially what the Fed is the central bank. So I don't like that they're kind of leaning out or trying to wean out regional banks. I like commercial or community banks. I like regional banks. I do most of my banking with them. It's more of a personal relationship than the big commercials that you feel like you're just a number. They don't give two craps about you. So I don't know. It's an interesting topic, but I wouldn't so much worry about that, Paul. Just don't keep any more than 250,000 in any account. All right. Let's keep moving on here. Agreed, not likely. Whether neither one, SBDCs. Kennedy is to balance the votes to make the results look close. Good. That's a good take on that. Yeah, I don't really know what to take of the impact that Kennedy would have on the election. I really don't. As we get closer, I suppose I'll probably hear more about it, learn more about it. But at this point, I'm just not smart enough to even make a comment on that. Three little birds, I'm sure you know a lot more than I do about how that would affect it. But right, neither want the central bank digital currency. Kennedy doesn't want it. Trump has outright said, I'm getting rid of the central bank digital currency. Now, can Trump actually do that? I don't know. I don't know if the president has enough power to literally kind of tackle the Fed. Other presidents have tried, no names I'm going to mention, and they're no longer with us. And you all know who I'm talking about. Like it or hate it, Trump, he is a good businessman, and the country is a huge business. Absolutely. United States of America is a corporation at the end of the day. So he can probably fix it like he did before and help on the world stage. Couldn't agree any more than what Lynn just said. Trump, at the end of the day, might be a bit arrogant, might be a bit boisterous, but damn dude knows business. And when he was president before, contrary to all the shit that they threw at him, he did fix a lot of the business side of things. He didn't fix it all, but let's all agree to disagree. Like, he had a lot of shit going on. He had a lot of things he was fighting because the Democrats just threw everything, including the kitchen sink, at him. So he was battling that, but he did definitely help the United States from a business standpoint, from an economic standpoint, and also the world stage point. We definitely had a much better standing on the world stage then than we do now. I hate to say it, but I can't believe that I can't even in my wildest imagination think that China, and we already know Putin's take, but China looks at the United States today the same way that it did over 4 years ago when Trump was president. I think China definitely looked at the United States as more of a world power when Trump was president, more of a threat when Trump was president. And probably China would say, hey, we're just going to kind of back off. But now it seems like China can push deeper and deeper. And Putin's already been, if you watch Tucker's interview with him, clearly says his thoughts on the United States of America. Let's see. They won't need a CBDC if you submit to a digital ID. Yeah, I've been hearing about that. I, again, don't know much about that right now. Let's see. So we got a couple people saying my vote is for Trump. I'm devoted. Just reading some of these comments here. So Ocean 888. So I was just in Texas, so I'm going to read this one. So in Texas, a guy legally changed his name to literally anybody else. So that's what he changed his name to, literally anybody else, in order to run for president. He's a 35-year-old math teacher and former Army vet. His former name was Dustin Ebby. Ebby. Interesting. So changed his name legally to literally anybody else. Oh, it's interesting. Morgan said Trump's first term was a learning curve for him. I agree with that. Now he has a much better understanding of the battle. Yeah, because if you remember in the beginning, he was just like, I'm going to drain the swamp. And then he was saying, whoa, the swamp's pretty deep. So, yes, I think he has a better understanding of the battle and how he could take it. He can't hit it head on. He's got to, I don't know what'll happen. Listen, like it's too early to tell what the election's going to do. I think it's pretty clear. It's not official, but it's pretty clear. Trump's front runner for the Republicans, and then Democrats looks like Biden if he makes it. I mean, I don't know. Does anyone else think there's going to be another Democratic candidate, or are we past that? I haven't really been following. Like, is it literally Trump, Kennedy, and Biden? Is that the final? Can anyone give me the take on that? I just don't know. How about Instagram, folks? Anyone over here on Instagram? Is that what it is? Is that the final take on it? Again, I just don't follow this stuff. Kevin Kelly said I was for Trump until he started selling Bibles for profit. Never Biden, now Kennedy. Okay, so Kevin Kelly's going to go for Kennedy. I didn't hear anything about Trump selling Bibles, and that may or may not hold water. I don't know. So he could get literally everybody else's write-in votes. Oh, that's funny. Not sure, Pam, who you're referring to there. The write-in votes, I would have to believe that's the dude. Is Biden running as the face for Kamala? I was watching a video the other day. Kamala was at some event clapping and kind of, like doing her clap as she normally does. And then she stopped clapping because the song she was listening to was a song against her. I found that pretty comical. It's T versus B. All right. So Just the Man just confirmed it's Trump versus Biden. It doesn't really seem like a fair fight. I don't know. It's kind of like Jake Paul and Mike Tyson. I mean, does anyone think that's going to be a fair fight? I mean, listen, like I grew up watching Tyson just decimate people. And I don't care that he's a little older. He's still got that killer instinct. And if I was Jake Paul, I know it's like an exhibition fight. It's all about the money, and I get it. But does anyone remember Mike Tyson like biting the ear off of Holyfield? Anyone remember that? Like Tyson doesn't like to lose, Jake Paul. I know you're going to make a lot of money, but dude, I have a feeling that that's kind of like Trump and Biden is kind of like looking at Jake Paul and Mike Tyson fight. Like, does anyone actually believe that Jake Paul could beat Mike Tyson? I mean, is there anyone out there? I'm just asking because that fight's coming up, I believe, in June. Does anyone think Jake Paul can beat Mike Tyson? Anyone? Tyson in 2 minutes. I agree. I literally think it's going to be a round one knockout. I truly do. I mean, I know it's an exhibition fight. I know Tyson is doing it because he just wants the money, and it just makes sense. But I don't care how old Tyson is. He's going to knock Jake Paul out. Probably going to break his damn jaw. I don't know. I would agree with three little birds. Does anyone else think anything different? And I kind of, the reason I'm talking about Jake Paul and Tyson is I feel like that's Trump versus Biden. And I think the only way Jake Paul could beat Tyson is cheating. That'd be it. That, in my opinion, that'd be the only way. Jake on juice. Maybe he is on juice. Doesn't matter if he's on juice. Tyson doesn't need juice to knock Jake out. Yeah, July 20th. Thank you, Kevin. Yeah, Biden is running for Obama 3.0. Very might be the case. I mean, Biden, might be. I mean, Obama might be running the country with Biden running. Who knows? Third parties usually just work as a spoiler for the one side. It's an interesting year, and I vowed earlier this year that we were going to talk about politics on this show, contrary to everything we've ever done on this show, and more so because it just riles people up. And because people like talking about it, it just gives them something to talk about. It's polarizing on one side, but it's also interesting to talk about on another. Yeah. It's with light gloves and head guards. Hold on a second. Wait a second. They're wearing headgear? No, they're not. Jake Paul and Tyson, I can't ever imagine Tyson putting headgear on. You're joking, right? That's not real. A day at Bernie's. Anyway, I was Three Birds just said that they're wearing head guards. I just cannot imagine that being the case, but I could be wrong. I could be wrong. Oh, I don't know if there's anything else. There's lots of things. Kevin O'Leary saying early retirement doesn't work. Gold climbs to record highs. More about credit card debt. I'm just on Yahoo Finance here. Stock gains are at odds with reality. That's an interesting one. So David Rosenberg, he's an economist, and he's saying the math does not add up. And he's talking about how stocks keep going higher. He said the math just doesn't add up. And I've said that numerous times. The economists I follow say that. And here's another confirmation coming in from Business Insider, David Rosenberg, saying it just doesn't make sense. And I agree. It just doesn't make sense. Let's see. Investors doubt a rate cut. I mentioned I was going to talk about the Fed, and I apologize, but I'll finish it up as we kind of wrap here. Now, I have a neat little visual of that, but I can't do it because it's on my phone, and my phone is streaming to Instagram, and I don't have Steven. So there was a chart put out on profits of the Federal Reserve, and every year was huge profits. We know the Federal Reserve is profitable, right? It is a private institution. But last year, the Federal Reserve showed like a $23 billion loss. It was like the first loss, I think, in their history. But over here, this is talking about the Fed, and it's talking about the rate cut. Now, I know earlier this year, the market got all, hot and bothered because the Fed hinted that they were going to drop rates this year, which is what the markets want. The markets want rates to come down because the markets know that banks are having trouble right now. Everybody's having trouble at these higher rates. It costs everybody more money, which reduces profits and future outlooks. So if the Fed were to drop rates, that'll be a positive thing for the stock market. Okay, we all know that. And the market's built in not 3 rate decreases, but 6. I don't know where they did the math. The Fed hinted 3, and then all of a sudden the market built in 6. But now the Fed has come out and openly in their minutes said that they're probably not going to drop rates as aggressively as they thought. And this one's saying investors doubt, now the investors are saying this, doubt that the Fed rate cut outlook as the economy booms. Okay, so as the economy booms, I'll just read this one to you because this is pretty interesting, and you guys should watch this on Yahoo Finance. The Federal Reserve has maintained its expectations for 3 rate cuts in 2024, but investors are growing wary on that forecast, projecting fewer cuts. Gradient Investments portfolio manager Keith, can't even say his last name. Let's see. Companies are seeing gold mines. Just seeing if there's anything else. The dude is saying that his $5,000 per year housing credit will help over 3.5 million families buy their first homes. Short sellers are betting $11 billion that crypto stocks won't rally, or that the rally won't last. Any of you taken profits off the table? Has anyone sold their Bitcoin in the rally? Just asking. I haven't sold mine yet, but I don't have a lot. I buy like $200 a week, and then when it goes high, I sell it. True Social went live yesterday. Yes, it did. True Social is now a publicly traded company. So is Reddit, which I find kind of interesting that Reddit went public and had the valuation it did. I just don't see it. If you're investing in Reddit, great, but I think you're probably going to lose more than you're going to gain. Let's see. Jane says, I feel like Biden will win just because of pure hatred toward Trump. But is the hatred toward Trump as strong and polarizing as it was before? I don't see it, and I'm in New York, so I don't know. There's still a ton of hate for Trump. But the hate for Trump, do you think it's going to go to Biden, or do you think it's going to go to Kennedy? That's what I was mentioning earlier. So, Jane, do you think that hatred, because there are a ton of people that just under no circumstance, no matter how bad the other side is, would vote for Trump. But now they have a third option, which is Kennedy. So will those Trump haters vote for Biden, or will they move and vote for Kennedy? Or will there be a large enough portion that vote for Kennedy, not Biden? These are just the different things to look at. And this is what polling is all about. The Biden administration knows this and will capitalize on that fact. Absolutely. People will vote for anybody but Trump. Biden will have Michelle Obama as VP. And once Biden wins, he will have a medical condition that causes him to resign and VP will take over. It's an interesting take, Jane. I just don't know. I think the Kennedy thing, I just think throws a unique dynamic in there. I get the polarizing Trump-Biden thing, but I just got to believe that Kennedy thing is going to take a lot of the votes that would have went to Biden away from those people that hate Trump. Let's see. Three Little Birds commenting on the Jake Paul Tyson fight. 16-ounce gloves, and both fighters are opposed to headgear now. Texas is considering the rule still. Yes. Small money worth, blah, blah, blah. So the white don't control. Let's see. Steve coming in. So the white don't control of stocks or energy, but the market's up and gas is going down. Some coincidence. Steve, I know it was a talking text, so I can't really follow that one. Dogecoin until Musk accepts it on X. Okay. Dogecoin. Yeah, that's an interesting one. Couldn't figure out how to sell. You couldn't figure out how to sell your Bitcoin? What platform is it on? If it's on Coinbase, it's easy. You just do it from your phone. Let's see. Love trading ticker for True Social. DJT. I didn't even know that. DJT. Donald J. Trump. Interesting. It's all theatrics anyway. Trump, Biden, Kennedy, doesn't matter. Yeah, I don't know. I tend to think it does matter. I really do. But with that being said, folks, we are at our time. So I know some of you were definitely missing Steven on this. I was too, because I wasn't able to share any of the awesome, visuals and didn't get his take on it. But you know what? Sometimes the show must go on. And that's what we did. Contrary to flying 20 some hours yesterday, the show is going on and I'm here to represent. So thanks everybody for joining us for another week of What the F Happened. And we will have a lot more this afternoon for Wealth Webinar. So any of you that want to join us, just go to chrisnaugle.com and register for the Wealth Webinar. It's 1 p.m. Eastern. We'll see all of you there. Until then, thanks for joining. See you next time.